To be back at Wolf Summit here in Wrocław. Thank you, Mike, so much for inviting us again here. And it's my great pleasure to moderate this panel with top CEE and European investors who will be sharing their insights on the current state of CEE startup funding. As you probably have seen, there have been headlines recently that European venture funding is growing enormously, has surpassed American and Chinese or in general Asian venture funding. Although different data are being given, according to CB Insights research for Q3 2021, European venture funding exceeded 62 billion euro. And produced over 50 unicorns. When we look specifically at the CEE region, it has grown tremendously this year. According to the newest report published by Atomico, Google for startups, CEE European venture funding exceeded 4 billion euro of investments and produced a few unicorns. So we can see that there's a great momentum for European venture and startup funding, and in particular for CEE. So I wanted to discuss those insights with our great panelists, and maybe I'll start with Donatella and Tomas. You represent top CEE funds focused in CEE, and I wanted to ask what are your thoughts on how the CEE region is growing, if it's growing, if it has become attractive to foreign and domestic investors, and if yes, then why? So Donatella, I'll start with you.
Okay. First of all, thank you very much for having me over. It's so excited to be here in person finally. So hopefully you all managed to get a glass of wine and we're not separating you from a nice drink and a chat face to face, which is about time. So one thing that I think is important to say that despite, well, myself, I'm Italian, obviously Donatella is a massive giveaway, but I also have a connection to the geo as Flashpoint has, because my parents are from Croatia. So I really care deeply about the extended Central Eastern Europe and development of it. I think it's fair to say that despite the latest three years development, and I think we have about 8 unicorns, if I'm not mistaken, in coming from the Central Eastern Europe. It's not a new thing for our geo. So we've been creating unicorns for the past 20 years, essentially. You know, Allegro, Skype, just to name a couple. And I think the reason, the extremely difference between Central Eastern Europe and Western Europe, in my mind, is the capital efficiency and the fact that, you know, the management team from building companies in our geos are much more capital efficient. They are, if you look at the statistic, we have the highest number of bootstrap companies that become unicorns. I think it's about 31% versus 7% from Western Europe. So going back to your question, I think we are very much on the path of creating a lot of more value and a lot more unicorns on the way, and I'm really excited about what is coming along.
Thanks. Good evening, everyone, and also thanks for having me here. I think it was a great move from organizers to place this event here in Wrocław. It's close from Prague, it's close from Warsaw, so great to be here. And maybe to build on what Donatella said about unicorns from CEE, look, I believe that many of them, they had to prove themselves hard way, and it starts with capital efficiency, as you pointed out. And I would say that unicorns out of this region, they have both. They have great historical performance, they have their numbers proven, but they also have a great potential still. So they have these kind of like two important essence of the success. And with all respect to unicorns from Western Europe, I guess unfortunately or fortunately, some of them are unicorns just because of volume of their funding and volume of the financing rounds, and primarily because they can participate in something big, some innovation wave which is going around, and purely by having all the resources and funds available, they got unicorn stamp at least maybe within the first 2 years of their existence. Although when we go back to numbers, we know that on average it takes maybe 7, 8, 9, even 10 years to get the, I don't want to call it proper unicorn stamp, but maybe well-deserved. So this is from my end to open up the topic.
Thank you so much. Marcus, you basically represent a German VC fund that is focused strongly on in the CEE region. So you have a great perspective in comparison how CEE is performing against the rest of Europe. What are your thoughts on the CEE funding and the current status of the CEE startup funding?
Yeah. Hi, everyone. Happy to be here. Yeah, so our fund is actually exclusively focused on Poland because we perceive it to be a very big market opportunity. We came here about 5 years ago, and since then I've been calling Poland my second home. No, I mean, it's, and what was true back then, I think is still true. I mean, we see very large funding numbers and hear about unicorns here and there, but I think those are all numbers on average, right? And I think it's very important what does this mean for the average startup, because I mean, this is an industry where it all concentrates on a couple players, and I still think that there's a lot of tremendously talented founders, and I mean, I'm speaking for Poland now because that's what I'm focused on, but I'm sure it's also true for broader CE, which are still having a hard time fundraising. And I think it can be quite frustrating for them to sort of like hear the bullshit that's written on the media. It's never been easier for a startup to raise money. I mean, yes, on average this is true, but again, sort of like, I mean, a lot of venture capital is really driven by herd mentality. And yes, once you're hot, sort of like, I mean, you're going to have 10 term sheets and not just one. But getting that first one, that is still insanely hard. So I think it's a mixed bag. I'm still super happy in this market. I think the core strength still has to play out in this market. So while I'm happy and appreciate the achievements of the first unicorns in Poland, this is not what I'm here for, and I'm going to be super frustrated if we're sitting here in 10 years and Polish unicorns are still going to be old economy unicorns, right? Sort of like the stuff that we've already had in multiple geographies before that's now also starting to become a unicorn in Poland. And again, that's better than nothing, but I'm much more excited about a UiPath in Romania, which is a real unicorn, sort of like that did something in a CE market that we don't already have in 5 other markets.
Thank you. So, Owen, Donatella, Tomas, and Marcus are really excited about CE, and it seems that it's growing. So why haven't you invested in the CE yet? If you could just perhaps...
Well, first off, I'm very happy to be here, and we're obviously here because we're hunting companies, we're hunting great relationships. So it's something that we've been working on for many years. Sorry. And it's true, I'm the only one on the panel at Expon Capital that hasn't invested in the region, and that's probably just because of our small team. But we're a growth stage investor, so the opportunities had been not limited, but just fewer. I mean, it was limited, and now that it's growing, we've been spending years working on making the relationships that we hope will help us be able to identify great teams, great co-investors, a great ecosystem, and it's thanks to all of the effort that's been put in over the years. And I know we've kind of been watching on the sidelines, waiting for that perfect investment opportunity. But we're actively searching right now and hoping to continue doing that for the long term. The other thing is we also invest within the UN Sustainable Development Goals. So that's like made our world even smaller. And I'm hoping as the CEE geo grows and all of those investment opportunities, so does our kind of like sub-segment within that.
Fantastic. We look forward to that. Okay, so we discussed a little bit about how the CE is performing, and you've been mentioning about unicorns. So I also wanted to ask you about the CE valuations. Just looking by the mere numbers, it seems that the valuations of European companies are much higher than the companies in the CEE. Would you agree with that in practice? Perhaps I'll start with Tomas.
Thanks. So, from experience and from the maybe last couple of months, I would say that when it comes to global opportunities, which especially is valid for B2B startups, I don't think there is a big difference or significant differences in valuations of CEE versus European companies. So, if you are building something which has a global potential from day one, imagine something like creating new vertical or building really like totally new vertical. I think founders, especially serial entrepreneurs, are smart enough to understand the valuations these days and reaching out to global investors even if they really building something super interesting and maybe something new like UiPath, Slightly different situation is in maybe B2C or B2B2C, where I would say it's still much more country by country play or city by city play. So obviously, if you're starting a consumer startup out of Estonia, and it takes a while to prove yourself in Estonia, obviously your valuation cannot be as high as if you started similar thing in Germany, France, or even UK. But what I would still say that Europe overall is still probably lagging behind or still with lower valuations compared to US, which may be the reason why US investors are really attracted to come and explore the whole of Europe and also CEE as a region.
To add a little nuance to this, I do think even at the early stage, maybe valuations are a little higher if you compare Germany to Poland. And I think there's two, again, there's exceptions for everything, but like on average, I think there's two reasons for that. One, I think, and that's also the reason we're in Poland, because we're so excited about technical founders. However, while technical founders are excellent at tech, they're normally not as good as more business-driven founders are at pitching and raising money, right? And if you directly compare the Polish to the German ecosystem, there's a lot more a team of 3 founders in Germany where all 3 of them could be the CEO, but it's hard to get the CTO, whereas in Poland, that's 3 people, and they could all be the CTO, but it's hard to get the CEO. And normally, most investors also have a business background, and if you have someone sitting there who's much better at approaching investors, having a systematic funnel, and in the end pitching, then you get to higher valuations. And I think if you pair this also with the level of professionalism and the competition among different VCs, and certainly there's much more professional VCs chasing the same chasing the same deal in Germany than there is in Poland right now. So I do think that might explain a little bit, while I think at least that for a relatively comparative team, the valuation is slightly higher in Germany than it is in Poland.
It's interesting, Donatella. So maybe from your perspective, as a also CEE investor, how do you think about the valuations? And maybe if you could, share your thoughts on what needs to be done so that the CEE region can produce more unicorns more regularly.
Well, I think first of all, being I'm managing the venture debt fund for Flashpoint. So as a debt investor, we don't price the upside. We are a complement to equity. So the upside for the management teams is that they can extend the cash runway without getting diluted with a price round. But having said that, I'm still getting affected by our warrants get affected by, over price valuations and so on. I think the ecosystem is in the making, and it's interesting what Marcus says. And being, I know you're focusing on Poland exclusively, but being German, you know that in the past 6 years in Germany, the ecosystem was created by, essentially Rocket Internet and the success stories there. So I think it's the CE is coming through that path, and I would expect countries like Poland, Estonia, Romania to really coming through ahead of the games. I mean, the disruption on the valuation is probably done recently, quite recently, by the effect of tier one investors coming in on attractive companies. And also, as you said, when the company is good and is growing fast and is hot, so they want to have a piece of it. So I think we're going to see more of it.
Okay, so I guess we need all natural time to pass and for the growth to happen, and then valuations will rise.
Sorry,
so
again.
We need natural time for the ecosystem to grow with, and valuations together with the ecosystem.
Well, you see already valuation going high, and it's the effect of US tier one investors coming in. So the effect there that I can see is what is the balance between working with hands-on investors within your region versus a US player that has got a brand and is marketed globally and so on. I think it's also about added value. And there is a pool of brand, definitely, but then the entrepreneur should actually really sit down and see, okay, I'm just a little sort of part, in the big pond, or I'm actually part of a family that could really help me grow to where I want to be.
Thank you. Owen, you have a different perspective, so maybe from your perspective, would you say that the current CEE valuations, you would perceive them as an opportunity or still as a risk?
I think certainly the entry points are still very attractive compared to most of Europe, and certainly across the rest of the world. From an American perspective in particular, I mean, the ecosystem in the US is flooded with capital. Valuations have gotten fairly out of control. And there's still a lot of opportunities. So even if things are on the increase, I mean, it's still lagging several years. But there's also these types of thresholds. And leadership still requires a certain amount of salesmanship, in all honesty, to be able to raise large capital, convince investors, and then consistently hit benchmarks repeatedly to be able to convince the long-term investors that those valuations are at global market standard. And I see that happening repeatedly also in CEE. And I think now that there's kind of more case studies of this happening, there's more companies that have done this, and there's more alumni basis from those companies being able to spread across Europe, that there's more of this kind of this expectation of hitting these new thresholds, hitting the threshold for a €100 million round, then for a unicorn status and a decacorn status. So I think those entry points are still available, but the hockey stick is definitely heading in the same direction, and the exit points can be just as attractive.
Yeah, talking about exit points, would you agree, it's a question to all of you, that lack of a big stock exchange in the CEE, a liquid stock exchange, hinders that? Does it make it more difficult to reach those high valuations that we can see? I'm not talking even about the US, but Western Europe with German or UK stock exchanges?
Well, I've got the mic. I'll add a short answer to that. I think it's not only just the stock exchanges, but the ecosystem that develops around it, the intermediary points that allow the kind of managerial work that needs to go into it before getting to an appropriate, multi-billion or decacorn status.
Yeah, I would agree. Just thinking what to add, I think more than 90% of exits in Europe are still done within the M&A path, which obviously doesn't provide such an opportunity for sizable exit and the IPO. But at the same time, things are changing and evolving. So hopefully we'll see also more IPOs coming out from this region in Europe as such.
Yeah, well, just something a little extra to add is that I could see the difference. I mean, if we look backwards and we look at the difference from the US and Western Europe to start with, so it's always been a problem in Europe itself for investors and management team to actually hold to the investment. So it was always been this culture of exiting as soon as possible kind of thing. So I think this is changing and is affecting our Central Eastern Europe region as well, because, and an effect of that is this increase of creation of unicorns, because if people will not continue to raise capital and continue to hold their investment, I'm sure that by the time they get to unicorn level, they had plenty of, not plenty, but surely offers to exit, M&A opportunities and so on. I think people are starting to change their mindset and actually look a little bit in long term, and this is extremely good for our geo.
Yeah, I mean, also the question is sort of like, oh, why does it matter if money gets invested via the stock exchanges or not? It just means sort of like the source of capital is basically coming from the public, right? And by the way, fun fact, sort of like, I mean, there's plenty of companies going public in Poland all the time, but the stock exchange here is not what people know from most countries. I mean, there's literally companies going on a stock exchange here every week at a 2 million valuation or a 10 million valuation or something. Normally the perception is sort of like you go public on larger stock exchanges once you're done with funding from the private markets, and you need significantly more capital, right? So I don't think there's a shortage of that capital. I mean, there's literally trillions of euros in the world that are getting negative interest. So it means people have nothing better to do than lose money, right? So there's, I mean, there's plenty of money. I mean, now you could argue sort of like, I mean, as a European, would I rather want my fellow Germans or my Polish friends, the public in general, to be participating in innovation? And that's probably an answer where I would say yes, because sort of like, but then I think it's much more of an educational thing, because it's going to take a lot of education to get a lot of forthgoing policies to get the general population to be more interested in investing in the stock market. But I don't think it's lack of capital that we definitely need the public to be pushing this.
Thank you. And Donatella, you said about changes. So we keep on talking about how the CEE startup funding ecosystem is changing and it's growing. So I also wanted to ask all of you about the current trends and in investing. And Marcus, you said about negative interest rates. So maybe I'll ask Donatella about the positive interest rates. I know that you're a managing partner in a venture debt fund. And venture debt in general is growing in Europe tremendously. However, it is not really that yet popular in Central and Eastern Europe. I've read somewhere, maybe as of last year, CEE venture debt accounted for maybe 1 or 2% of the whole European market, which is like a marginal number. So why do you think it's that? Why do you think this class of assets is not that popular?
I think, and this is like an ongoing problem of mine, I've been educating the market for forever. So, I think the major problem, if you look at the US, and we're always going back to the US, unfortunately, but if you look at the US, is an attractive asset class that has been around for a very long time. So we're talking about 40 years, if not more. So in Europe, just to give you a little bit of history, this type of product was first introduced on a French startup only in 1998. So, and has been quite a pool, and for a number of years, only been 3 providers, and well, I was working on one of them. I don't want to give them any marketing thing. So it was only 3 providers in the ecosystem covering the whole Western Europe. So, and forget Central Eastern Europe altogether. So now it's quite recent, this approach to try to educate the market about when to use this program, when is beneficial, and it's also beneficial to my equity colleagues as well, because we all, if we look from a point of view of sort of funds, we all have a hurdle rate. So and we, what not to like in someone else, just put more cash on your portfolio company. But just going back to your question, the reason why there is this big gap between Europe and Central Eastern Europe, even more so, and versus the US, it comes down only and exclusively to the way the security is taken. Because, for example, and the fact that Europe is divided in so many different jurisdictions. So in the US, you can do a venture debt deal in the same way as you do in the East and the West Coast, and also is common law. In Europe and in Central Eastern Europe, it's, we have different kind of law, a different way. I'm learning myself as well. So every time I do a different deal in another jurisdiction, I'm Italian, so we're gonna go over time, I'm telling you.
That's fine, we have time. Just confirm, we have a lot of time.
So every time I try to explore a different jurisdiction, I come across a different way of dealing with things. So doing a deal in Germany is different from doing a deal in France or in Poland or in the Czech Republic and so on. And I think this is also why there are not so many providers. And if you look in the US, there are banks doing it all over the place. And it is a barrier to entry. The jurisdiction and the law is a barrier to entry. So you need people that understand the product and understand how to structure it in an efficient and quick way.
Thank you for this. So maybe now talking less about the structures of the transactions and the trends, maybe Tomas, I'll ask you about the sector trends. I've read some in the most recent EIF survey that 35% of venture investments in Europe is made into ICT, 25% in biotech and healthcare. You have a lot of companies from these sectors in your portfolio. How would you say the CEE region is doing against the general kind of European sectors in terms of investments? What do you look at, perhaps?
Yeah, so overall for us, we've been in software for more than a decade, and we started on the consumer side, and we are evolving a bit more towards B2B2C, and now also in the pure B2B space. And I would say CEE is still much more about software investments and probably light models, if I can call it like that, compared to Western Europe and obviously the US. I also read some article about that recently, that maybe European investors are not courageous enough, to back like hardware startups or even biotech and things you mentioned. I think it's just the natural development we are going through. I think it's up to us as a VCs or investors to stay open-minded, when looking at new opportunities, and maybe not saying no immediately, because there is some red flag in terms of like hardware, for instance. On our end, we have pretty good experience with the backing of what we called tech-enabled businesses. So if you look at like the companies like Rohlik, which is e-grocery, it wasn't very, I would say, sexy category 7 years back when we wrote the first check, because it was primarily about box moving, operations, logistics. Maybe logistics was the interesting part back then. But I think the open mind is extremely important to really back those courageous propositions that turn to be successful after 7-8 years of doing so. So I would wish to see more courageous investors and more probably bets where you really need a conviction.
Into hardware.
For instance, in the hardware, but it doesn't have to be hardware. But it's easy to invest B2B SaaS or marketplace where you don't have any, let's say, operational, skill set required or something extra, because it's pure software. It's a light model, but I think we will need a bit more if you want to see more unicorns coming out from the region.
So Marcus, if you could just compare perhaps, after a few years already in Poland, how do you see the Polish trends in investing if you compare it to what's in Germany, for example? That's a very general question, not only about structure sectors.
Yeah, we try not to really focus on trends. I mean, the thing is about like once it's a trend and once it's a buzzword, I mean, we as early stage investors have clearly missed it, right? So this is that's why it's not a good thing to be focused on trends. But what we try to, we don't even say sort of like we invest in these or those specific industries. We have clear hypotheses at Sunfish Partners. Like we say, all the startups we invest in fall in one of two groups. Either they're building up a gigantic, unique data set, or they're building tools to be working with this, right? And there's clearly sectors in which we're over-investing because we see the opportunities there to be really big, and the healthcare space is one of them where we're making a lot of bets. But it's not, we're not trying to invest in something because it's on vogue, which, by the way, could be a good strategy, but not for someone who writes the first check in a company, right? Sort of like this is rather a tag-along strategy, but in order to succeed with such a strategy, you need to kill a brand as a VC. You probably invest 2 stages later, and you have a much longer history than Sunfish Partners does. So, I mean, not only are we not interested in that, it also wouldn't be a strategy that would be very successful for us. But I mean, if someone asked me what do I think is a big trend right now that isn't being seen, then certain topics that I think are still having an unnecessary hard time to fundraise in Europe, which are starting to become very hot in the States, which I think are going to be, once we speak here, there's definitely going to be a panel on longevity in 3 years at Wolf Summit. I think this is, again, because I mean, that's basically the next step, right? I mean, once people have money, they try to think, okay, how can I increase my health span and become healthier longer in my life and eventually live forever? That's a very big question that a lot of people are going to focus on. So that's something, if you want a buzzword that's going to be on vogue in 3 years, I'd bet on that. Or if you want the industry that I think is going to make the most trillionaires, literally trillionaires, but let's stay with billionaires for a second, in the next 30 years, then it's definitely investing in climate-related stuff. Not because we think it's the right thing to do, right? Because that I think is the wrong approach. I mean, there's probably 200 million people in the world who care about changing and doing good things for the climate because of the goodness of our heart, because we want to guilt someone else into it. But there's 8 billion more people we need for this, and we only get them on board if we make stuff cheaper, faster, sexier, better. You have it, right? And the market for this, I mean, we as VCs always on slide 2, there's going to be the market, and we want to see it's a billion or even $1 trillion market. And basically for any climate-related challenge, the market potential is 8 billion people, or in the future 11 billion people, times X. So it doesn't get much bigger than that.
That sounds absolutely exciting. Owen, would you agree to that? Because you invest out of Luxembourg, so you basically invest everywhere in Europe. Would you agree with Marcus about those trends? Will we be talking about that in CEE, for example, in 3 years?
I hope so. It sounds interesting. But I mean, I don't think of trends just as being sector specific. And I think that following, just like you said, Marcus, like following just the hot trends is probably either the start of a bubble or a bubble that's bursting. And being able to find those entry points is just similar to the kind of classic value investing mentality, is being able to find points in the cycle where it's attractive. But there's another trend that I'm actually looking at that I hope from some of our other portfolio companies will help increase the stability and kind of the cross-company diversity across the CEE region, which is being able to price up the value of great talent and great developers throughout the region. Particularly in CEE, there's incredible tech talent, just as we've all talked about, and it hasn't been appropriately priced in the market. But because of the pandemic, one of the upsides is being able to do everything remotely, which means hiring remotely, which means pricing remotely, which means compensating remotely. And all three of those things are going to, I hope, cycle back to increase confidence with the existing talent base, and eventually feed back into investments in companies that can grow with having a little bit of capital under the belt from the day one.
Thank you. Okay, I think we're slowly running out of time, so it's really great having you all here and hearing those insights. It's great to find out that we have great pool of tech talent in CEE and that the region is growing. Let's hope for the next panels to talk about those exciting future investments like Marcus mentioned. Tomas and Donatella, we said that this is quite late for such a serious discussion, and with so much wine waiting for everyone outside. So thank you very much. It was a pleasure having you here. I hope it was interesting.